So how is it that the stock market's booming and GDP is up, but the wealth inequality gap continues to rise? Of course, we all work with or for some American company in some capacity. The better they do, the better we do. You would also think that about the total value of the things America makes going up as well. And yet somehow this remains not to be the case. Of course, politicians will lean on this economic data to try and hoodwink you into thinking you're better off because the stock market's doing better or GDP's up. This is similar to when they tell me that the health of the Chesapeake Bay is improving. That's because what's actually happening in the U.S. economy is that big companies are taking more and more market share. The hottest corporate move is to acquire and merger. In fact, we have whole industries surrounding the idea that you can just buy up small or underperforming companies, repackage them into one conglomerate, and resell those at inflated prices for higher profits. This is also known as private equity. Now, of course, only big companies have the big money to be able to make these moves. So we're seeing big companies become bigger, and therefore, of course, shareholders and CEOs of those big companies becoming richer. And there's nothing new being made or innovated to justify this added profit. They're really just siphoning a stagnant pool of wealth from the lower class. In fact, there's so little new things being created that the actual rate of new entrepreneurs or new small businesses has gone down from 12 to 8%. Those same corporations will then take their profits and instead of issuing them as dividends back out to their shareholders, money on which they would incur a double tax, both being taxed on the profits and the shareholders being taxed on the dividend, they instead do what's called a stock buyback. When a stock buyback, they just take those profits and buy up more of their own shares. This, of course, falsely inflates the price of the stock, and then shareholders can go ahead and sell those stock for a much higher profit, only having to deal with capital gains tax, which can be mitigated by losses and then also carried over. So if you're a large institutional investor, this has probably been a great ride. But the problem is the situation I just described is known as a bubble. Inflated values without the corresponding increase in products or services. And at some point, bubbles are known to burst. So if you're a medium to small American business owner being tempted with that high buyout, I urge you to reconsider. That business may be more valuable to you and the average American economy than we all think.